those are the 5 factors that are currently moving with your portfolios. Hi, I'm Daniel, and in case you are not following all of the headlines in the finance world, but you want to know why your portfolio is up 2% in one day and down 3% in the next one, today I'm going to briefly introduce you to the main factors that are actually moving with it. So let's dive in. Okay, so first of all, we got that conflict in the Hormuz, which by the way still lasts, and it takes much longer than market initially anticipated. But the main problem with this conflict is that one day we got informations that peace is coming, and right in the next one we got new informations about another attacks and escalating of the conflict. And market really doesn't like this kind of uncertainty where it doesn't know what it should actually do. Nextly, closely linked to the conflict in the Hormuz is the oil price, which it already looked like we are going down. We were down to the level of the 70, but unfortunately in the recent days we spiked once again to the levels around the 90, what of course is not good, and it creates a ton of negative implications towards the economy. Higher oil price creates higher cost of transport, makes higher cost of goods, and it creates another wave of inflation. So yeah, we are back at it again. And when we are talking about inflation, of course we have to talk about the Fed, as market isn't the only one that doesn't like the uncertainty, but the Fed as well, as there is peace coming one day and the conflict is escalating right another, and the oil price is jumping like on the trampoline. It's really hard time for Fed to make the right decision about the interest rates, because in case the oil price would stay at the higher level for a longer period of time, it would create quite strong inflationary pressure towards the economy, and therefore Fed would have to decide to increase the interest rates and keep them higher for longer. But at the moment, as it's changing on the daily basis, it's really hard for Fed to make a decision, and as Fed meeting is like once in a month, the expectations that we can see on the market movements are changing on a daily basis as well. Another factor that comes into consideration is of course the AI boom. We could see massive hype around the companies connected towards the AI hype, whether they were creating semiconductors or anything else. They were able to grow tens or hundreds of percent in the previous months and years. On the other side, the companies that could be easily disrupted by the AI, like Adobe, Duolingo, and maybe even Palantir, are seeing hard times in the recent days. The main problem with the AI boom is that we are currently at the extremely fast-paced moving environment. Every single day we are getting new information from the AI sphere that could potentially move with the markets. New chip, new AI model, new whatever. And depending on who introduced any of those, of course the markets are moving accordingly. And as a bonus to this, we got another earnings season started, and so far it looks pretty good. The majority of the earnings incoming looks better than expected, but the market is a bit afraid of whether all of the spending towards the AI will ever pay back and whether it's actually sustainable. In the end, yes, the market is a little bit more volatile than in previous weeks and months. You might hear a lot of noise about the conflict, about the oil price, about the inflation, about the AI booms, about the earnings, but overall the mood on the market is really good. We are sitting almost at the all-time highs on the S&P 500, while the market is quite tense, and I believe that any kind of bad news, even though more escalating conflict in the Hormuz, or some problems in the AI sector, even higher oil price or not so good earnings, could easily send market few percent down. But still, it would be only the healthy recession after the growth from the recent weeks, months and years, which was not healthy and definitely not sustainable. Okay, so I believe we are at the end of this video. Those were the 5 main factors that are currently moving with your portfolios. What do you think? Will we see the higher highs this year, or will we go actually lower? Let me know in the comment section, but for me, that's all. Thanks for watching, have a nice day, and see you all at the next video. Goodbye.